Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucy, and some of you know me as Triangle Investor from X. Today, I'm joined by Jordan Trimble, Skyharbour Resources CEO. Jordan, it has been a while since we last talked. Welcome back.
Yeah, no, thank you for having me. It has been a while, lots to catch up on and lots to look forward to in the next few months. So looking forward to doing this interview with you.
Same here, Jordan. I want to start with your comments on the broad uranium market and your expectations for the remainder of 2024. What do you think? How will that play out?
Well, yeah, I mean, as we were discussing offline, obviously it's been a sluggish summer, as we call them, the summer doldrums. Not unusual, not unexpected, I'd say, given, what we've seen the last several years. There is a seasonality in this sector. And we're seeing that in full swing currently. Obviously, the spot price has pulled back from the previous highs earlier this year, but it's still, compared to 12 months ago, up quite a bit. And I think most importantly, we again, the market likes to hone in on the spot price, but the long-term contract price continues to tick higher. We now have the spot price trading closer to that near-term price, around $80 a pound. And so I think we've set the stage nicely for a very strong, bullish end of the year. There's lots of moving parts and potential catalysts over the coming weeks. Obviously, as we come into reporting season for Cameco and Kazatomprom, as we all probably remember, last year that was one of the the main catalysts going into the fall and into the new year that really propelled the market higher. The news, well, both companies guiding downwards and lowering production, and so for different reasons. But Kazatomprom in particular, with their sulfuric acid issues and development delays, I think the market will be paying close attention, and it's going to be very sensitive to any guidance downwards or lower guidance over the next few years. And then, you've got, as we've discussed, as a number of your other guests have discussed, we've got a incredibly bullish set of underlying fundamentals that I think are stronger than they've ever been, and a major structural supply deficit that's built up over the last handful of years, depending on how you measure it. But you're looking at 30 to 50 million pounds, upwards of 50 million pounds in a primary mine supply deficit. There's really no quick fix here. It's not easy to bring new production online. If you look at some of the largest development projects, they're years out, and that's assuming a best case scenario. So the market was relying on the Kazakh ramp up over these several years, and again, with the production issues and ramp up issues we're seeing there, it's really stressing the market and putting upward pressure on the uranium price. So when we look at the demand side, there's a very rapidly accelerating demand with the advent of AI and the data centers that are incredibly energy intensive, that are required to run 24/7. We're already seeing nuclear being talked about as a main source of baseload emissions-free, reliable, scalable, affordable electricity generation for these data centers going forward. I mean, the numbers there are potentially staggering, right? If you look at just currently right now, you've got energy consumption with these data centers that the current ones, as well as the ones under construction, that total to over 500 terawatt hours across 7,000 data centers, again, either currently operating or under construction. And that's expected to more than triple over the next 10 years. So 10 years out, with over 1,500 terawatt hours of energy and electricity consumption, that's more electricity consumption than all of India currently. And so again, as we see the rollout of and the expansion of this new industry, nuclear energy, in particular small modular reactors, and some of these advanced nuclear technologies will, I think, play an integral role in providing the electricity for these data centers and for other new industries, emerging industries as well. So this demand side is really starting to kind of come into its own, and with demand now at over 200 million pounds of uranium annually globally, and growing at a much more steady clip than even 3 or 4 years ago, when the supply side, primary mine supply side of only 150 to 160 million pounds. And again, no quick fix really right now, certainly not at these prices. This is going to create upward momentum and pressure for years to come. And so I getting into more of a short-term forecast, it's always difficult, obviously, to predict what's going to happen in the next 6 to 12 months. But one of the things that I'm keeping an eye out for will be the long-term contract market going into 2025, as we've seen relatively low volumes in the contracting market. Big part of that, I think, has to do with the Russian uranium import ban in the United States and the waiver process, which again, we're coming into a period where that import ban is now in place. The waiver process is more clear now. So I think a lot of the utilities, in particular, obviously the U.S. utilities impacted by this legislation, they were on the sidelines, and they will be coming off the sidelines here in the latter part of this year. So you could see a flurry of new long-term contracts being signed, which will be good for the market. And again, we've seen producers continuing to buy. Certainly, if we see any production guidance downwards, lower production numbers from any of the larger producers, they'll have to make that up likely by buying in the spot market. And and we're coming to the end of we are at the end of this era of a secondary supply abundance, but we're also seeing a lot of utilities flex up on their existing contracts and kind of pulling every lever they have available to kick the can down the road. So that only lasts for so long. So again, I think we have this coiled spring currently, and I think the end of this year and early next year, we're going to see the next leg up from this $80 mark with the uranium price.
Agreed, Jordan. You have been busy on the exploration side with more Preston and Russell. I want to hear more about that. So let's start with more, where you had some spectacular high-grade assay result, like 7.3, I believe, U3O8 over 3 meters, within 5 meters of 4.6 U3O8. Tell me more about these results and generally about this drilling campaign you had at Moore.
Yeah, so look, Moore Lake has been one of our flagship projects. It was the flagship project from basically 2017 right through to 2022. And as we've discussed in previous interviews, we've done a fair bit of drilling there, as have some previous operators. There's multiple high-grade zones or lenses that are relatively shallow and predominantly sandstone hosted. Some of the notable previous drill results, for example, when we first took on the project, we announced 6% over 6 meters, and within that there was a zone of 21% U3O8 over 1.5 meters. A few years ago, really the last meaningful drill program we carried out at the project in 2021 and 2022, we intersected some high-grade basement-hosted mineralization in a new zone at the East Maverick target area, and that included a highlight drill hole of 6.8% U3O8 over 2 meters. And then this program, the significance of this program is there's a few highlights. One, it's the first program that we've carried out at Moore Lake since 2022. So we haven't been as active at the project in the last several years. The reason being, we've been focused at our recent acquisition, which is the Russell Lake project, acquiring from Rio, which we'll talk a bit more about. So we had allocated more of the budget and funds to exploring and drilling that project over the last several years. So we decided this year it made sense to go back and continue expanding the known high-grade zones at Moore Lake. So those numbers that you highlighted, 7.3% over 3 meters, and there was a 15%, up to 15% zone over a half a meter. And so that was at the main Maverick zone. So that should help expand the resource there, add some high-grade pounds. Most of the holes that we drilled in this program, it was it's a 3,000 meter program. Most of the holes that we drilled were mineralized. All of the holes at Main Maverick were successful in intersecting pretty notable zones of mineralization. So we've likely expanded the resource there, and we are planning another 2,500 to 3,000 meters of drilling, fully funded and permitted, which will commence later in August and provide some additional news flow this fall for us and our shareholders. And one final note too at Moore and on those results that we just discussed, they're relatively shallow, right? So the unconformity lies at about 260 to 280 meters. So a lot of that mineralization is actually hosted in the sandstone. And there is the potential for additional zones to be discovered along strike. It's a 4.7 kilometer long conductive corridor and hosts several high-grade pods. But it hasn't been completely explored. Only about half of it's been systematically drill tested. And that drilling has really just been focused down to the unconformity. So there's still a lot of good exploration upside potential in the underlying basement rocks, which we will look to test with upcoming drilling, as well as continuing to expand the known high grade at the unconformity and in the sandstone.
Sure. Jordan, are all the assays reported, or there are some more to come?
All of the assays at Moore Lake in this recent winter program have been reported. We do have a few holes pending from the end of the drilling at Russell, but most of those assays as well have been reported to the market.
We will discuss that. One another question about Moore. How far are you with Moore to define a resource estimate for the project? How much work and what kind of work is required to achieve that?
Yeah, it's a great question. So we have again several zones of high grade mineralization, and there's a small resource or deposit there. We're working on a resource estimate. One of the reasons this is one of the reasons we wanted to get back to drilling the project, and in particular these Maverick zones this year, was for the resource estimate. One of the reasons was to get better density readings of the rock, which we've been able to do with this drilling and with the, again, upcoming 2,000 to 3,000 meter summer program. And we really want to go in there and try to expand the known high grade as much as we can, right? A lot of the drilling that we carried out in recent years, call it from 2020 through, or 2019 through to 2021, 2022, was really kind of more exploratory drilling versus resource expansion or delineation drilling. So this drilling that we're carrying out this year, should give us enough for to put our best foot forward, if you will, with a resource estimate at the project.
Okay. Let's touch on Russell project. You have a new discovery over there, like you said, with high-grade uranium mineralization up to 3% of U3O8. This is a new identified zone on the property. Those results are from the winter program, but you have summer program planned very soon, right?
Yes, absolutely.
Tell us more about the discovery and how will you play this going?
Yeah, so Russell Lake, for those unfamiliar with the project, because it is a relatively new asset in our project portfolio, we're acquiring it from Rio Tinto. So Rio has become a large shareholder of Skyharbour. They're one of three larger notable strategic partners that we have. Rio, as a large shareholder, Denison has been the largest shareholder of Skyharbour, strategic corporate shareholder since 2016, and their president, CEO Dave Cates, is a director of Skyharbour and personally a large shareholder of the company. And then the third strategic partner is Orano, which we have a JV partnership with at our Preston project. Now, we will likely be forming a JV with Rio at some point at the Russell Lake project as well. So they would become a JV partner at the project, as well as a large shareholder of the company. So, a big stamp of approval, if you will, and they've been a fantastic partner to work with thus far. So Russell is much like Moore Lake, an advanced stage exploration asset. It's a big property in what I consider to be some of the best real estate in the Athabasca Basin. Between Russell and Moore Lake, which are adjacent to each other, it's just under 110,000 hectares of combined property, basically all the ground between the McArthur River Mine and the Key Lake Mill and Denison's Wheeler River project to the west. The haulage road, mining haulage road, runs right up through Russell Lake, as well as power lines that power the McArthur River Mine. And we've also inherited an exploration camp that can host up to 40 people. So it's a key asset now in our portfolio. And it's also allowed us to go in and drill both at Russell and at the adjacent Moore Lake project at a very inexpensive sub $350 Canadian all in a meter. That's probably one of the, on an all-in basis, one of the least expensive drilling campaigns and cost structures that you would find anywhere in the basin with any exploration company. We can drive right up from our geological office in Saskatoon to the camp, and most of the targets at Russell are road accessible. Now, the recent discovery, because this very much is a breakthrough at the project, it's a major new development, and it's something that we haven't seen yet, nor had any previous operators seen at the project over 25 plus years of exploration. There's been as you can imagine, there's been a decent amount of exploration, but because it's such a big property and there's so many conductors and targets and interesting areas on the property, a lot of that historical exploration was very reconnaissance in nature, right? Exploratory in nature. It was widely spaced drill fences, and really not a lot of systematic drilling or infill drilling in and around mineralized fences to go in and properly vector in on a high-grade discovery or deposit. As you're well aware, you can have 100 million pounds in less than 100 meters of strike length, right? So you really have to vector in on these high-grade discoveries and deposits. And so we are acquiring this project at a point where I believe it's ripe for discovery, and I believe we've just tapped into something likely on the outer edges of it that could be a much larger zone of high-grade uranium mineralization. So we announced up to 3% over a half a meter. That was within 2.5 meters of 0.72%. And so, what we're looking for, and that's for what it's worth, is the best result historically at the project. It's sandstone hosted, and it's relatively shallow at about 340 meters depth above the unconformity. So it's a very exciting new discovery and find. It's the first hole that was drilled into and successfully intersected this newly identified conductor. And that's a key takeaway here, is that this zone had very little to almost no drilling. There was one exploratory reconnaissance hole Rio drilled a ways away, hundreds and hundreds of meters away from where we drilled this hole. And so it really did not have a lot of historical work. And one of the main reasons for that was the power lines that run up through the property actually run right over these conductors. And so the historical geophysics were inconclusive and very much it was challenging to garner drill targets with that historical data. And so a lot of, again, the previous operators, a lot of the drilling that was carried out, the project was carried out outside of this target area. So we went in, we refined it. We did a lot of geological modeling. Our geologists did a fantastic job of coming up with drill picks, and lo and behold, the first drill hole that we drilled into one of these conductors in the fork target intersected this high-grade zone. And again, like I said, it's we believe it's the start to a much larger discovery. We think we're going to be able to go in and expand it this fall, this summer and this fall. And we've got some initial drill holes picked out where we're looking at drilling into or testing cross-cutting structures or features that would allow the kind of the main conductive structure to be more broken up and allow for the fluid flow that can create higher grade zones, larger higher grade zones of uranium mineralization and deposition. So this summer program is going to be a pivotal program as we follow up on this initial discovery. Like I said, fully funded, fully permitted, and we are planning 4,500 to 5,000 meters of drilling, and a good chunk of that will be focused in at this new fork discovery.
Excellent. So high grade and shallow. That's the winning combination, definitely. Jordan, let's move to Preston Uranium project. It's, like you said, JV project with Orano. You have completed the exploration work there as well. Tell us more about that and the next steps for that project.
Yeah, well, it's still ongoing. They completed the first phase of the 2024 field program. So Orano's the majority interest holder. We're a minority interest holder in the project and JV partner with Orano. Yeah. It's the first program that's been carried out in several years on the project. So it was great to see them get back to work there. We decided to fund our pro rata amount of the program. It's just under $1 million program. So a pretty significant and larger field program that consisted of geophysics, which were completed recently. And then they're going in this summer and they're carrying out an SGH soil sampling program, which is somewhat of a newer technique that can cover, it measures trace amounts of hydrocarbons associated with uranium mineralization. So it'll be interesting to see what kind of results they get from that program. But yeah, very happy to see a meaningful amount of work being carried out this year, and that'll generate more news flow throughout the remainder of the year.
Okay, you have also the other projects. What about them in your portfolio? Is there any exploration work planned for them in 2024 besides the one we covered?
Yeah, so just to recap, our second part of the business, we talked a lot about Russell and Moore and our main focus at those projects and the drilling that we're carrying out, which just to again emphasize those two projects. That's now the largest drill campaign collectively on Russell and Moore Lake through 2024. It'll be a combined 15 to call it 18,000 meters of drilling, about half of that complete. And the other half fully funded and coming up here for the remainder of the year. So we've obviously been very busy at our main projects, but we have our prospect generator business to ensure that the other 25 plus projects we have in our portfolio, we've got over 1.4 million acres across 29 properties currently, and again, we're always looking to continue to build that project portfolio when there's opportunities that arise. But we want to make sure that the work is being done at these other projects. And so we've got our prospect generator business, which is currently consists of 7 partnerships. 3 of them are joint ventures. We just talked about Orano at Preston. We've got 2 others, one with Azincourt. They completed some drilling earlier this year. Final assays pending, and we are expecting additional work programs from them later this year going into the new year. We're just a minority interest holder at that project currently. And then there's 4 option partners that are still actively earning in. So they're still paying Skyharbour cash and shares annually to complete their earnings, as well as funding the exploration entirely. And so all 7 of these partner companies currently represent potentially upwards of 80 million in combined project consideration. That's project or exploration funding, as well as cash and share payments that could come in, assuming again that all these companies fully complete their earnings, right? So it's not to say that they're all going to do that, but if they do, it's a significant amount of cash shares and exploration funding coming in. Now, of those 4 current active earn-in partners, we just saw 2 drill programs completed by Tisdale and North Shore at the Falcon and South Falcon East projects. Now, those are very exciting projects for us in our portfolio with those partner companies. South Falcon East, which Tisdale's exploring, is host to a small deposit right at surface, and they're looking to expand that deposit going forward, as well as making additional discoveries. And North Shore at the Falcon project carried out what was the first drilling at that property area in a number of years, and they had some early success there with plans to follow that up later this year and in the new year. So there's a lot going on with the various partner companies. We are in fairly advanced negotiations on several other of our 100% owned projects, and we will likely be announcing new partners and option agreements in the coming months as we work our way through the remainder of the year.
Great. We will stay tuned and watch for that news. Jordan, you have a strong cooperation with Denison too, as you acquired some of their projects in the past. We all know that Denison is pioneer or will be a pioneer with the ISR mining method in the Athabasca Basin with Wheeler River, Waterbury, and Midwest, if successful, of course. My question to you is, Jordan, is there a ISR potential on some of your projects since they are geologically similar and close to some of Denison's ISR projects?
Yeah, I mean, look, it's a great question. I mean, at Russell and at Moore, I mean, Russell Lake, if you look on a map, you'll see there's a number of the conductive fertile corridors that are on Wheeler River trend right onto Russell, right? So a number of the main targets that we're testing, including the Grayling target area and this new Fork target area, are just the continuation of those conductors on the adjacent Wheeler River project. So yes, very much when we're drilling, obviously the first objective is to make discoveries and prove up pounds in the ground, but having a sandstone hosted, potentially ISR amenable zone of mineralization certainly makes it much more interesting. Again, through the lens of an ISR, potential ISR operation. But we've got a very good working relationship with Denison. As I mentioned, they've remained our largest corporate shareholder, and Dave Cates has been a director of the company of Skyharbour for a number of years, and we work as closely with them as we can. Russell and the Fork Zone in particular is, where the Fork Zone's only a few kilometers, about 4 kilometers away from the Phoenix deposit. And even as we work our way further to the east to our Moore Lake project, absolutely, we are looking at some of the targets or existing zones of mineralization there, with the idea that there could be the potential down the road for an ISR or even Sabre operation or extraction technique. And so the high grade mineralization that we announced in the drill results from Moore, that's predominantly sandstone hosted, relatively shallow. So it is something that we do kind of keep at the back of our mind. But most importantly right now, it's about making new discoveries, and it's about expanding known high grade zones of mineralization at those two projects.
Okay, you mentioned your prospect generator model. How is that serving you so far? And do you have any plans to take the company in some other direction?
Look, it's been a great secondary part to our business. It's grown quite a bit over the last 5 years. As I mentioned, we've got the 7 current partners, 3 of which are now, they've completed their earn-ins, they're joint venture partners. And then we've got 4 active earn-in option partners. We're looking to add to that list here. We just did a small property deal with Cosa as well. So we've got a big inventory of land and properties in the Athabasca Basin. And the prospect generator business is a phenomenal way to monetize some of that. Again, bringing in cash and shares on an annual basis. It provides our investors and shareholders exposure to some of these partner companies through our equity holdings in those companies, as well as typically a minority interest in the project, or even an NSR that will hold on the project. It provides for a lot of additional news flow. I mean, look, if one of these partner companies is successful in making a major new discovery at one of those projects, I mean, it would be great to own 100% of the discovery, but even owning 20 or 30% of the property, a big equity stake in the company, and possibly an NSR on the project, that's worth probably some multiple of our current market cap. And so it's been it's been a great addition for us and our shareholders to help kind of grow the company and not just be a one-trick pony focused on one or two projects, kind of living and dying by the drill bit. It's provided a dynamic to our company and story that I think investors quite like. And it's also helped obviously keep, equity dilution in check. We haven't had to do a hard dollar private placement and raise hard dollars in a financing since August of 2024 years. The money that we've raised in recent years has been all, for the most part, charity flow through, critical metal flow through financings where we get a significant premium and it's much less dilutive, and that money has to be spent in exploration and drilling.
What's your current cash position as we speak?
Yeah, we've got about 5.5 million in the treasury, and that will grow as we receive more cash payments, right, and share payments from our various option partners. And so we've been able to basically pay for all the G&A and additional acquisition costs with money that's come in from the monetization of some of these non-core projects. We have had some warrants as well over the last few years, albeit we don't have any more warrants in the money currently. So yeah, we're well funded. The upcoming 7,000 to 8,000 meters, we've got a budget of about 2.5 million for that. So we've got plenty of cash to cover that. And then again, with the partner companies earning in, they're required to fund all of the exploration, and with the JV partners, they're required to fund the bulk of the exploration. We can elect not to participate. We dilute out of the project, but there aren't any other major work commitments on our end.
Yeah, you mentioned the deal with Cosa. I want to hear more about that. I am biased with Cosa. I really respect the guys over there. You announced the agreement to sell a portion of your uranium property, Karin, I believe it's the name of the property. How did this transaction happen?
Yeah, I mean, look, it's a relatively small transaction, as you can see with the share issuance, and it was just two claims that were a part of our larger Karin project that we staked through online staking. So relatively insignificant amount of money, and they've got a project adjacent to it. So we decided it made a lot more sense in their portfolio, and we'd rather become a shareholder. They also the claims themselves have work commitments, right? That you need to fund if you want to keep the claims in good standing. And quite frankly, we were focused in other parts of the basin currently, so we didn't really have plans to go in and do any work there this year. So we're happy to become a shareholder of Cosa and follow the company and follow their exploration at those claims as well as the adjacent claims that they already owned.
Got it. Your comment on M&A. We saw Fission Paladin deal. Do you see more M&A in the Athabasca Basin this year or the next one?
Yeah, I do. I think the trend is pretty clear right now. There's a more and more M&A happening. There's consolidation happening as the market continues to ramp up, and there's and for good reason. You look at all the companies operating in the Athabasca Basin, pure play Athabasca, Exploreco's developers, or larger developers / producers. I mean, Cameco is the only real producer in the Athabasca currently. But if you look at the universe of companies that are in the Athabasca Basin, you've got a number of micro caps, much smaller cap names, sub 20 million. You've just got to call it a few companies that are sub, call it 50, but larger than 20. But then there's this kind of big void in the 50 million to 500 million Canadian market cap range. So I would deem those to be advanced stage exploration stories and or early stage development stories, and Skyharbour being one of those. And there's really now only just a few of us left, being Skyharbour, Canalaska, F3, and Atha. And if you're looking at potential M&A targets, and companies that, you know, could be acquired, or that's I think a pretty good group to look at going forward if larger companies are looking to make moves. So I do think that, you know, there is going to be more M&A. I think Skyharbour is in a good position to take advantage of that. And, you know, right now we're obviously focused on the drilling and the work at our two main projects, Russell and Moore, as well as the partner funded programs at some of these other properties. But yes, we're in a good position, and I do believe you will see more M&A and consolidation throughout the sector, and in particular in the Athabasca Basin, as we've seen a handful of larger transactions take place in the last several years.
Final question, Jordan. What are some upcoming catalysts for the company, some news flow in the remainder of the year?
So the big one being continued drilling, right? So another 7,000 to 8,000 meters of combined drilling at Russell and Moore, fully funded this summer and fall. The bulk of that again will be at Russell, with a few thousand meters allocated at Moore. We've got the resource estimate at Moore Lake as well. And then we've got all of the partner-funded drilling and programs later this year and early in the new year. Of the 7 current partners, I'm expecting programs from at least 4 or 5 of them. And, you know, this is market dependent, but I would expect that you will see quite a bit of news flow from those partners over the next 6 to 12 months. We're also, as I mentioned, in negotiations on optioning and JVing out some of our other 100% owned projects. We've got an inventory of 20 properties still in our portfolio. And so we've got lots of other properties that we could find partners on. And then last but not least, I would say keep an eye out for additional acquisitions, project acquisitions. We, on one hand, we do look to option or JV out properties, but on the other hand, we're always opportunistic in acquiring new ground if the value, we see the value there. And then the uranium market, this is a market that generally has been a good place to be in the last 4 years. We obviously talked about the volatility we've seen this year, but that's not unusual given the time of year. And I do think there's a very strong case for a much better uranium market to the end of this year going into the new year.
Yeah, that was Jordan Trimble, Skyharbour Resources CEO. Jordan, thank you for coming to my show. It was a great chat, and looking forward to hearing from you again with some news. Thank you.
Thank you very much, and I look forward to catching up at some point down the road.